They say mornings are the most important part of a day because you start off your day with a bang, with a good morning, and here's us wishing you a very good morning on Good Morning Sri Lanka. Today, as always, we have a special guest with us because we thought we would need to give you some insight into finance yet again. So we have today Purasisi Jinadasa. He is head of research at Capital Alliance Securities. He is an individual who has had vast experience abroad, over 11 years of equity advice providing all over the world, coming back to Sri Lanka today, right from a sustainability research company, to just because Sri Lanka has a lot of opportunities and you people out there can embark on that journey towards a global opportunity in Sri Lanka. So here is Mr. Purasisi Jinadasa. How are you today? Good morning to you.
Thank you. Good morning, and thanks for having me on the show. It's a great pleasure.
It's our pleasure to have you on the show. So going right into what we are to discuss today. So today, if you really think about it, a Sri Lankan, an average Sri Lankan is very much happy having a savings account, having some money in it, la-di-da-di-da. But then things are changing now, right? Because things are taking a topsy-turvy, complete new dimension. So just to throw a question at you, what is this entire portfolio investment all about?
All right, well, if an individual wants to make above normal returns over a long period of time, it's advised to always look at a mixture of investment vehicles. Now, historically, above normal returns have been achieved if you invest in equities. Now, the issue here in Sri Lanka is that lots of people have been burned by investing in the stock market, in the Colombo stock market. So there's lots of hesitancy in going back in. Now, there are three simple precepts or guidelines that I'd like to share with you for anybody that enters into the market or anybody interested in investing in equities. Firstly, you have to do your homework, right? Don't give your money to somebody else and expect them to work in your best interest. It doesn't work that way. World doesn't work that way. So at least look at the businesses you are investing in, understand their core operations, right? And then you can be able to track your portfolio. The second is be a diligent and committed investor. So if you say you're going to put 10% of your disposable income on a monthly basis into equities, do that on a regular basis. That's how you will be able to build up a sustainable and profitable portfolio over the long run. And finally, the third point is you have to understand the market that you're investing in, right? In the context of Sri Lanka is a frontier market. So if you think you can trade and make money over the long run, you're going to be disappointed. It's a frontier market. Invest for the long run, 2+ years at least, right? So in a practical sense, if your stock falls in value, right, if you lose money, if you invest in a stock and the price falls, don't panic. Just hold on. Just look at this. Look at the company. See if something has changed materialistically. If it hasn't, it's your opportunity to buy more of that company and bring your holding costs down. But conversely, if it has changed and it's not viable anymore, then no regrets, sell out, and look at something else. So those are the three guidelines, right? Invest diligently, be committed investors, pick your stocks carefully, and invest for the long run. So if you follow those three guidelines, especially in the context of Sri Lanka, over the long run, you will outperform.
So something that I really caught my attention, or that caught the viewers' attention for that matter, is above average return, because that's what drives all of us crazy today, right? Above average return. So just a question to you today. Let's say a layman walks into a bank, into a savings account. So keeping all three guidelines in mind, a savings account, we all know, is something that is safe, no risk, nothing. You mentioned the word equity, just for our viewers' benefit. How would an equity be different from a savings account, if you can give me that perspective?
Sure. Well, that's a difficult question to answer, but a savings account in general, as a young, let's look at this in
young
the context
guy.
of
21, 22 years.
Exactly, young professional. You would be getting maybe 3%, 4% on your savings account if you're lucky, right?
But that's a guarantee on a monthly basis.
Well, nothing is guaranteed, right? If the bank fails, for example, you lose your money. Okay. I understand. So it's a okay. Let's say it's guaranteed. Equities, on the other hand, is not guaranteed. Right? And that's why I emphasize you have to do your homework.
Exactly what you said. The three guidelines.
Yes. So in the context of a young professional, my advice is that you should invest at least 80 to 90% of your disposable income in the stock market. There's one main reason for this is because you're young, right?
Yes.
You can afford to make mistakes.
Yes.
And more importantly, you will learn from those mistakes.
And no pain, no gain.
Exactly. So if you do this consistently,
yes,
you'll become a wiser and more successful
yes,
investor over the long run, right?
Yes.
So you have to make mistakes to learn from it. Practice makes perfect,
yes,
right?
Exactly.
So as a young investor, put 80 to 90% away. In the context of Sri Lanka, I would advise not putting money into more than 5 stocks.
Yes.
Right?
Okay.
The Colombo Stock Exchange is not broad enough.
Yes.
It's not deep enough for you to diversify too much. And not only that, it's easy for you to track 5 stocks.
Yes.
And if you over diversify, over the long run, you will bring your average return down.
Yes.
Right? So again, pick your stocks carefully, invest in, let's say, 5, and you'll do well over the long run.
Okay. So now something we're discussing today is a profitable portfolio investment,
Sure.
right? So now something you just mentioned a little while back is pick your stocks. So now when you pick your stocks in a diligent manner, as I may put it across, because again, when you walk into a bank, you just walk into any bank in Sri Lanka and then pitch in money. But this is much better, because why? You can get a much better return, because today with the inflation, your interest is not going to give you anything at all. So then how do a person, a layman or a young professional, pick stocks when he goes in, these 5 stocks or something? What would be your key criteria?
So first, well, look at the core business of the company that you're interested in, see if it's viable, right? So look how they've been doing over the past few years, look at profitability.
Okay.
And since you might not be adept in analyzing stocks,
yes,
go to a third-party research provider, and look at what they've published on those shares, and see if they're fundamentally sound. So if you have a long-term view, you will always consider whether this company will be in existence 2 years, 3 years down the line. If it is, right, or if you think it is, then it's a good investment, because Sri Lanka is growing.
Yes.
Right, whether you disagree or agree, it's growing. Maybe 6%, 10%, whatever it is, it's growing. So over the long run, those shares will perform well.
So again, what you said was again spot on. Health of the company is what matters. So as you said, check how they performed and stuff like that. So very good. So we check that. Let's say someone checks that and buys the stocks. Now the point being, talking about Sri Lankan market, because most of our investors are going to play in the Sri Lankan local market. In comparison to the other Asian markets, you name Singapore and all these markets, Sri Lanka is quite different in its nature. What would you say to an investor sitting out there, or a young professional? How is the Sri Lankan market different from the other markets? What are some of the things you need to remember in a Sri Lankan market? Because I understand you believe that Sri Lanka is not a very, a stable market. We are on a growth, and
we're still on a growth phase. Yes,
exactly.
So let's see. As I mentioned, Sri Lanka is a frontier market.
Yes.
Markets around us, let's say Singapore, for example, is more or less transitioning from an emerging market to a developed market. So the stock market there is much larger, right? And it's, let's say, harder for people to drive individual stocks up, right? So if you invest in the Singapore stock market, the likelihood is that you're not going to make above normal returns, because it's already developed, it's already mature.
It's matured.
And information is readily available. So coming back to the Sri Lanka market, this is not the case.
Yes.
Right? The stock market is very small.
Yes.
Average daily, the amount of money that flows through the market on a daily basis is about $8 million US. It's nothing. Right? So in this context, it's very important to again remember to pick your stocks carefully.
Yes.
Right? And assess whether these companies will be in existence 2 years
for a longer span of time.
Yeah.
So again, it's about being very cautious. But then, pick your stocks well. Just to also ask you on a question, today there is this entire philosophy that's going around that conglomerates, because they are themselves diversified, would that be a good idea to pick? What would your take be on that for a person sitting out there? Because sometimes they're very comfortable going for a conglomerate.
Sure. For a young professional, I would advise against it. Right? Many of the conglomerates in Sri Lanka are conglomerates because of the history of the country, right? Luckily, for our benefit, the government has been able to defeat terrorism, but before that, the market size was such that all companies had a ceiling. They couldn't grow beyond that. So because of that, they widened their base, right? So they've got into different businesses. But what this does, again, as I mentioned, if you over diversify even your portfolio, your returns, average returns, will come down.
Okay.
Similarly, for companies that are conglomerates or over diversified, the average return will come down.
Yes.
So always look for companies with a single, simple business process that you can understand and invest in those. And if they're fine, if they're sound, the returns that they will generate over the long run are going to be much higher than, let's say, a diversified company.
So a specialized company would be something, and you could diversify your portfolio if you really
exactly
want as well, right? So something else that I wanted to also ask you today, there is this for a young professional, you sometimes go for dividends.
Yes.
Right. So sometimes you're waiting to see what is the dividend declaration, but little you know how much of stock you hold, and when you multiply, you're basically taking home nothing.
That's right.
I do understand you said Sri Lanka is a frontier market where you need to wait for some time.
Yes.
Today, just to clarify this myth out there or clarify this doubt out there, as a young professional, would you advise someone to look at the dividends that's being declared or a capital gain? Apart from being a frontier market, what would your idea be?
So again, for a young professional, I would not advise them to look at dividends. Yeah, they should look for undervalued growth stocks.
Okay.
And these stocks generally don't provide a high dividend just because they need to reinvest their money into their business to grow even more, right? So look for capital gain, right? Dividends, look at it like this. Majority of the companies that are providing dividends right now, if you look at the percentage you get out of dividends, it's maybe it's less than 4%. So you might as well put your money into a savings account, right?
Yes.
Why do you want to invest in the stock market if you're looking for a dividend?
Yes.
4%. That's not how you should look at it. Look at dividends as a bonus, right?
Okay.
But look at the capital gain for longer term
as the core thing. Yes. So as you know, we've discussed quite a little bit of stuff. We started off basic, but then we are giving you some fine tips on how you could make that portfolio quite profitable, because none of us want to lose. And if you really want to make bucks, this is the show you need to be tuned on to. We'll see you on the other side of the break.